All right, guys, good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Sorry for starting a little late today. Tons of headlines were coming in regarding the banks. If you're interested in those headlines, make sure to keep it locked on our Twitter page at G.A.R Capital, at GARCAPITAL. All the headlines direct from the Bloomberg terminal. Rock and roll. Let's go over it. The Dow closed today down 0.20%. Pretty choppy on the day. Not much happened. NASDAQ down 0.72%. S&P closed right at 3,900, which was our gap fill level from last week. We talked about that. Now that's your support. It's been holding up. Futures were a little green as we closed. We got some news from the banks. VIX was down today, 1.03%. Equal weight S&P pretty much flat today as value got the bid today. We'll go over the sectors. Small caps actually bid 0.37%. Let's keep an eye on the small caps IWM. I'm going to go over that chart here in a second. Dollar index down 0.22% at 103.95. That helped buoy or keep afloat equity prices. 10-year yields 3.194. TLT down 0.85%. Yields were up today. GLD gold down today pretty much flat, 0.11%. Silver down 0.10% on SLV. High yield credit down 0.61%. Again, kind of matching NASDAQ composite. The investment grade bonds were down today about 0.92% worse off than the high yield ones. And as we go to crude, crude was up today 2%, 109.81. $3.75 for gasoline, down 0.74%. There was someone who was asking, why is it that if crude oil is down, how come gas prices are not cheaper? Why does gasoline and crude oil come different? You can understand that gasoline is refined. So again, you have to refine the gasoline from the pipes. Again, oil just comes from the ground. That's just base crude oil, but gasoline still needs to be refined. So there is more steps to take, harder to come by. Mind you, keep in mind. So let's keep an eye on gold as well, down 0.34%. But again, this is futures, 18.24 an ounce. Gasoline was down today, 0.74%, $3.75. Remember, the price of most commodities, guys, is on the futures market. That's really all it is. It's not rigged in terms of prices. Sure, you could say that you have some market movers, but for the most part, that's what it is. Knowing gasoline prices and crude oil ahead of time, you won't be surprised when you see the prices at the pump because it's based on futures. So if you're interested in how raw commodity prices affect products and companies, feel free to type in on your TOS Thinkorswim platform. You put the /, and you can start putting any commodity you want. You can start with C. You could start with NG, nat gas. You can go with HG, with copper. You can go with crude oil, which is CL. And if you go online, they have all that information from the CBOE. So again, it's really fun, especially if you're just trying to get your feet wet with futures. It's good to at least understand what you're looking at. Keep an eye on Bitcoin today. Bitcoin was down 1.79%. Started to base right around 20,600 today. I've been watching it tick by tick. We're at 20,903 currently on Bitcoin. On the spot price, Ethereum, again, down 2%. I had a question the other day over the weekend regarding Investment Club. They're asking, in regards to crypto, Bitcoin kind of moving in its own direction. I kind of equate Bitcoin to the S&P. Again, that would be considered a beta of 1. And the altcoins, depending on their market cap, the smaller the market cap of the altcoin, Shiba or whatever, that's going to be a higher beta, meaning it's going to move a little more than the actual Bitcoin. So again, if Bitcoin's up 2%, Shiba's going to be up possibly 10%. So that would probably give it a beta of 5. So high beta. We talk about that with the high beta names, AMC, GME, NEO, BABA, all these names. When the Qs are up, again, that's kind of beta, or you can use the S&P as your beta, and they're higher mark beta. So again, Bitcoin being that leader, the one that everyone knows, the Coca-Cola, if you will, Ethereum being the Pepsi, and the rest being the rest of the soft drinks. Kind of think of it that way. Again, I own some alts. This is not to, kind of poo-poo the alts. I'm just saying the way they move. They don't move coincidentally one to one. They move again in their own ways. Luna went to hell, but again, that doesn't mean Bitcoin did. At least not to zero, anyways, or close to it. So again, it's very important to understand why things move when they move. And when you do learn this stuff and you know why things move when they move, it becomes easier to trade, easier to understand. You got to learn before you earn. That's why this channel is meant to inform you, not to scare you, not to butter you up, not to rub your belly and say everything's going to be okay or everything's going to fuck up. It's just information, just here to give it to you straight all day, every day. So again, choppy day today. Let's go over S&P futures together, or we could just do SPY. So I know you guys always love to talk SPY. Let's take a look at it. Again, we filled this gap right here, 390. There is another gap to 400, or let's say 401, 402 on SPY. Again, kind of that same downward trend. It's the same deal. But again, we're kind of flagging here. Again, kind of seeing just kind of flattening. But here's where it gets interesting. The longer you stay in a channel, or the longer you stay kind of sticking together, let's just say the prices, the more likely you're going to get a measured move. So we had that the other day. So again, you can do ascending triangle if you want. The last time we had that, when did we have that? We had some moves last week where we had the same deal. See what I'm saying? So you actually have the ascending triangle. I expect us to go higher again, 402, 4,000 S&P, whatever. But again, as we're bouncing off support, we are having that ascending triangle. So I expect us to go higher. I do own calls. So that's what I'm looking at here in terms of S&P. We'll go ahead and take a look now at the dollar. And we talked about how important the dollar was. And now this is kind of the opposite. Let's go ahead and do the drawing tools. And, for those who are not the best at, technical patterns, I know there's tons of them. Again, you got a downward wedge. You can call it a descending triangle, whatever you want to call it. But again, what happens when we have a lower dollar? We talked about this as well. It means it becomes cheaper for the multinational companies to do business overseas with weaker currencies, a weaker dollar versus a strong currency overseas. So you can see this is the pattern for the dollar. Our support would be around 102.50 if we do break down. Or again, you could just retest 103.55, which is what I expect. This helps the stock market. Stock market going to go higher to 4,000. Again, we actually have something that's linking up to what our analysis is, at least on a macro level. Let's go to 10-year. The 10-year has a couple of gaps to fill. These are 10-year yields. Got an upside gap, you got a downside gap. I mean, really the way it's going to go, it just depends. Go to TLT. We actually had a bond auction today. 2-year and I believe a 6-month. The yields came in a little higher than expected, hence why bonds came down in price. So a little more of a sell-off in terms of bonds. We got a downward gap to fill at 110.68. This is TLT, the 20-year bond ETF. I do own this. So again, I am long government debt, but you can see just a downward channel. And again, if you just want to draw some lines on the screen, you can. And I do expect yields or the actually bonds to come lower as we start testing lower and lower. And then it really goes until the imagination takes you. You can probably get to 108. Now, will that hurt equities? Bond yields were high today. Stocks were down today, definitely. So again, that could be something, just depends on the velocity of bond yields, again, or bonds, how much they sell off. So again, I really don't go by, oh, if this goes down, that goes down in terms of bond yields, because it isn't one for one. But again, it does matter in terms of the velocity. Remember, the bond market is not meant to be moved this quickly, the fixed income market. Savings bonds are very, very sleepy. You own it for 10, 20, 30 years, and that's it. But now we know that fixed income and credit rule the world. And as the bond market continues to have more players, or let's just call it more traders, this becomes more volatile, especially in a very uncertain rate environment. But again, I'll just say it. I mean, I have to say it to just say it. The reason why the bond market is broken is that you have a Fed that you can't trust. You have a Fed that lost all credibility at the end of the day. This is a central bank that not many traders in the market really believe in. So again, they have to win back that credibility. And one way to do that is to beat inflation with raising rates quickly, and to beat inflation as quickly and smoothly as possible without causing a recession. So I guess one could say that the soft landing that they're talking about is the biggest test for Fed Chair Powell and this Federal Reserve. We'll go ahead and go to small caps now, where small caps have outperformed. We do have a gap to fill out 178.61. I would probably go ahead and take a look at those calls possibly tomorrow. Maybe go long on futures, but again, you could see kind of the same deal. Sending wedge, again, getting tighter and tighter and tighter. Something's bound to break, guys. It's going to break on Qs. Same deal. Again, ascending wedge or ascending triangle, whatever the hell you want to call it. You have 295 there. You're going to break higher. I mean, it's just the basics of it. Again, granted, any crazy headlines that, barring anything we don't foresee in terms of not macroeconomics, but more geopolitical. Because I don't know if Russia invades Poland, all charts don't matter. It's you could just throw it all away. It doesn't really matter. We're going down. And now I don't think that's going to happen. But I'm just saying, there's always the other side of risk. Risk again is something that you cannot see, but I can tell you something. It's something you feel. You feel it when it's risky. Am I right, guys? You don't see it, but you feel it. Let's answer some questions. Belligerent says, good afternoon, Carlos. Good afternoon, sir. Let's go over the sectors. As I see, we get some questions coming in. Everyone's pretty quiet. We had a really great week last week. We had a nice video this week I did for you guys. I really enjoyed it. I'll probably do some more for you guys over the weekends if it's a way to kind of prep you for the week. I love to do it. This week, today, let's go to the groups. Energy led the way with crude going higher. Utilities did pretty good. Again, value kind of being rotating in. Keep in mind, last week it was all cyclicals, all tech, all communication services. That was the stocks that we were watching for a bounce. We didn't get a bounce today. We got pretty chopped today, so nothing doing. Cyclicals were down, communication service were down, tech was down. So that was more of a risk off sentiment. Energy, utilities, materials, healthcare, commodities and healthcare. We know healthcare is pretty stable depending on the stock, but for the most part, today was a risk off after a crazy Friday. Happens. We still got 4 more days until the holiday for July 4th. Let's go and take a look at the maps here, see what moved and what didn't. Amazon's going to have 2 Prime days now. Pretty cool. I am a Prime member. I do love Amazon. I spend way too much on Amazon. Again, I think Amazon does bounce in the future with great guidance and a great earnings report. Got to see this next earnings report and see where they're at in terms of Amazon, how much cash burn, issues with the warehouses, and all that stuff. Very, very important. But look at energy, bright green. UNH, my baby. I love United Healthcare. Had a great day today. Merck, I also own, had a great day. Pretty much the best 2 stocks I had other than energy. But yeah, other than that, Qualcomm had a nice day. I also own that as well. Microsoft down about 1%. Apple pretty much flat. Google, or Alphabet, formerly known as Google, down 1.62%, and Meta down 0.39. Tesla pretty much muted 0.32%. This is going to change tomorrow. We had some banks report some headlines today. As you know, they passed their stress test. So let's go over a couple of highlights. We'll go ahead and go each stock one by one. So Goldman Sachs did report earnings. Reported that they are going to increase their quarterly dividend to $2.50 per share from its previous dividend of $2 per share. Awesome, awesome. I do own Goldman Sachs, so that's music to my ears. Another one here is Wells Fargo. Wells Fargo is planning to boost their 3Q dividend to 30 cents per share. The estimated was 30 cents. So Wells Fargo, take a look at that. And up a penny after hours. Not exactly a big mover. JP Morgan maintained their dividend to $1 per share. I own JP Morgan. Kind of disappointing, even though they passed their stress test. But the word is that JP Morgan wanted to hold more cash on their balance sheet. Let me see if I can get the exact details and the exact quote from JP Morgan here. JP Morgan says, Q3 22 in light of higher future capital requirements. So I guess they're just being more conservative. That's Jamie Dimon. I'm okay with it. If they want to just bolster that balance sheet, but they already have a really great balance sheet. So again, they're playing defense. JPM being a value stock or value company. Again, you're all about the yield, sure, but I still think JPM has value for sure. The other company that reported in terms of their increased stock buybacks or hiking dividends. Again, this is just because of the stress test from the Fed last week, where they passed all the banks passed. And the reason we do these stress tests, reminder of 2008, what a disaster that was. So that was part of the Volcker rule. That's a Fed thing where they're going to make sure that these companies can handle a depression, a crash, where liquidity gets really tightened. And then you have loan defaults. They want to make sure that these companies do not need to be bailed out again. So keep that in mind. Bank of America raised its quarterly dividend to 22 cents from its previous dividend of 21 cents. Not bad, not bad. I don't own Bank of America, but let's take a look at BAC together. And BAC is up 5 cents, 6 cents after hours. Not exactly a big mover. Morgan Stanley authorized a 20 billion multi-year share buyback program. And Morgan Stanley announced a quarterly dividend of 77.5 cents versus the previous dividend of 70 cents. Now this gets interesting because I own Goldman and JPM. Morgan Stanley has been a name that's been my number three that I've been wanting to get into. Let's go and take a look at their PE forward PE on what is this on Morgan Stanley? Let me zoom out here. Morgan Stanley. I got to zoom out a little bit on my other monitor. There we go. That's it. Just the monitor. Well, Morgan Stanley trades at a 9 PE. Goldman trades at a 7, so Goldman's cheaper. JPM trades at a 9. Bank of America trades at an 8. Wells Fargo trades at a 7 and an 8. And Citigroup cheapest among the bunch at 661. That's a pretty good PE ratio, especially if you're looking at banks. So again, I think Morgan Stanley would definitely be worth a buy. I wouldn't want to buy it on a rise either. Let's go and take a look at the daily. This is a name that I want to own. More than likely, we'll just fill this gap here around 81, but see if we've got some support we can work with. Really, support is right around 67. So again, you probably have some more downside move here. Again, worst case scenario. Again, we talked about the bottom, but not the true bottom. Morgan Stanley and the banks could take a hit. We have a downside gap on the daily, guys, at 52.67. So I'll keep an eye on it and let's see if we can get a little bit of a deal on it. I wouldn't want to buy it when it's up. Not on this news, anyways. The news is great. I'd be happy if I was owning it, but I wouldn't be happy of just buying it here. Not a question, but say thanks for these videos and info. Cheers. Oh, thank you. Thank you, William. William's asking about Nike. Nike did report earnings. Let's go ahead and go over those numbers together. I am a Nike shareholder, proud one as well. They didn't say anything about fixing the sneakers app. They need to fix that. You could tell that I do like my Nikes. So if you're a big sneakers fan, I'm with you. I get it. It's totally collectible. I like wearing them. I don't keep them pre-wrapped or anything. Back to Nike, and I retweeted the numbers. If I can find it here. Nike Q4 earnings revenue of 12.23 billion, estimated of 12.13 billion. So that's a beat on revenue. It's a miss on EPS, 90 cents versus 93 cents year over year. Gross margin was 45%. They missed. The number was 46.7%. Greater China revenue 1.56 billion. They expected 1.74 billion. They authorized a new $18 billion stock buyback program. Just what you want from a very much a legacy retailer of apparel, direct to consumer and even to retailers. I think Nike's away from Foot Locker from now on. But most people now, I think they shop on the Nike app, use a sneakers app. I'm pretty sure people use it because I hardly ever win on that sneakers app. Not anymore, anyways. But in terms of Nike, just look. Let's take a look at the daily chart together. I like the stock buyback. Don't get me wrong. I like it a lot. I think that's great. But I think we can get to 100. We can get to $100 on Nike, save us a little 10% move. Maybe tomorrow we get some downgrades. And if Nike can go ahead and possibly fill this gap to around 101.87, again, the numbers are not beautiful. Again, China taking a hit. We understand that. We understand that Nike is not something that you need to buy. It's not a consumer staple. It's a discretionary. So again, discretionaries being the first ones to take a hit when things are tough or a recession or a slowdown. And then when things turn around, that's when these names go higher. The consumer discretionaries, the technology, the higher growth names. So I do love Nike long term. I love the fact they're doing a stock buyback. No word on a dividend raise as of yet. That would be nice. But if you've been owning Nike for a while, they don't pay a big dividend anyways. You're owning it just for the most part that it's a pretty stable company with great margins and tons of operations overseas, a truly global brand. And, in terms of apparel, I like them and Louis Vuitton Moet Hennessy. And again, you could buy that from the French exchange. They have the ADRs on that. It's kind of like Alibaba, but they pay a yield too. And again, those two companies, I like Lululemon as well. Those are kind of the three apparel names I would like long term, just for the simple fact that those consumers are very loyal to the brand. Apple has that in spades, but Nike does. I know damn well I am very loyal to Nike. Louis Vuitton is a great company. I have a belt to them, and they're nice leather. I have a bag that I travel with, and again, they just last a while. And again, they're expensive, but again, for their clientele, that's what they love. And in terms of Lululemon, I mean, I've seen lines out the door at their outlets. So again, Lululemon is a popular brand for a lot of people. I think Nike is just a little tad better. But again, if you're looking for growth, a little more expensive, Lulu would be it. Big shoe guy and shareholder too. Yeah, I mean, I do love Nike. I mean, I always said to people, invest in things that you personally consume. Because, let's say if you like Starbucks, man, it's not a bad idea to buy some shares in a company you're going to give money to anyways. At least own it. If you like McDonald's, buy McDonald's. I mean, totally cool. I mean, there's tons of companies that you do business with that you've never thought of investing with. If you have AT&T, go ahead and buy AT&T stock. They pay a yield. Not the best in terms of balance sheets, but again, you could do worse. You could do worse and buy some really bad companies that don't make anything. At least AT&T has some revenue and actually provides a service, which is kind of what we want now, especially in this environment. But Palantir, name that I own and I've been holding for a while. I love the name. Palantir 7.5 is a number that I'm looking for. Would like to buy or add to my position as we go along, but again, 7.5 is a level that I'm looking for to buy some more. And again, if we get to that 4,000 channel and reject, you better believe Palantir's coming down with it. So you may get another shot if we don't break above 4,000 and we just reject. You'll get a shot at buying Morgan Stanley cheaper, Target cheaper, all of them. You're going to get them a big chance. This is why I didn't go crazy on just start buying everything at 3,500. Let's get to 3,500 like a sniper. I'm just waiting for my shot. Let's not just throw bullets all over the place. Excuse me. Thoughts on Robinhood. And Robinhood, I went ahead and tweeted that headline, the big old switcheroo. And someone always knows. Look at that. Pop and drop. First, FTX is saying they're going to do it. Then FTX says they're not going to do it. But someone knew because these contracts, the 8.5 calls, they had 24,000 in volume today. And I don't know if they had them earlier today, but those went up about 1,100%. So pretty much could be an inside job. Who the hell knows? Do I want to own Robinhood? No. Even though I use Robinhood, that's fine. And there's some products you probably just don't want to own the stock. And again, if you like Robinhood and you own it, cool. I mean, if you want to keep it for takeover reasons only, maybe for all we know, FTX and Hood are really talking about negotiating of a buyout. And this is just them saying, we're not sure yet. Who the hell knows? But pretty sure there's going to be a lot of people pissed off who chased it today. I hope for their sake that Robinhood does bounce. I don't wish the stock to go down. I hope it goes to 10 so everyone who tried to catch it on the upside gets to cash out because it's a tough game that we're in. All right, guys, we'll leave it there. Have a great rest of your day. If you do like these videos, guys, do me a favor. Make sure to hit that like button. Make sure to hit that subscribe button because more videos are coming. I love doing it for you guys. Always fun. We'll catch you guys tomorrow for the morning note at 9 a.m. Eastern Standard Time. My name is Carlos Garcia, your humble host. Have a good one, guys.